We have with us a special voice. Ramin Nakisa, strategist at UBS, is with us on the phone line. Ramin, great having you with us. Let's first talk about the appointment of Janet Yellen before we talk about the US debt ceiling issue and the stalemate that continues. What do you make of this appointment and her perceived dovish stance? What impact will it create for global equities?
Good morning. I think the impact will be fairly limited initially, because I think there'll be a lot of continuity between Yellen's policies and Bernanke's. In fact, I think it'll be almost seamless. I mean, she's an old hand. She's been involved in almost all of the decisions that the Fed has made, over the last few years. So I think we expect continuity of policy to start with. I think the real difference will be the end game for policy. So now it won't make much difference, but maybe 2 years from now, the appointment of which Fed chairman is chosen will decide when they stop tapering. I think that's more important than when they start tapering, which we assume is going to be in January next year.
And what's your estimate of the size of the tapering?
Well, we think that initially it'll be fairly subdued, so something like 10 billion, and probably they'll favour MBS because they don't want to stop buying MBS because they want to keep interest rate payments low for mortgages in the United States. What they don't want to do is to stymie the US housing recovery. We've already seen a little stumble with the housing new purchases. So I think that's something they'll try and avoid. So initially we think they'll taper more with treasuries and less with MBS, and probably they'll start in fairly small size.
If you would have heard, and I'm sure you would have heard Bernanke and then John Boehner's comments, one gets a sense that neither side is willing to relent on their stance. Are we looking at a big setback to global financials in case there is any kind of a default if the October 17 deadline is missed? I mean, how bad could it turn out to be?
Well, in terms of how bad it could be, obviously it could be catastrophic, because if they do default on the debt, the repo market will be affected, and that'll affect all of the fixed income markets globally. And remember that treasuries are used as collateral. They're considered to be as good as cash globally. So if that were to change, then there would be seismic changes in the financial system. But our central case is that won't happen. Our central case is that it will be resolved at the last minute. And you can also see, if you look at markets, that that's pretty much what they're pricing. The S&P is only 4% off its peak in the middle of September. Volatility is still fairly subdued. It's just reaching 20% for the VIX, which is kind of like, its long-term average. So at the moment, fairly subdued response to the markets, and I think we're all pricing in a last-minute resolution.
And, how would emerging markets react in case there is any adverse development? I know you are not really expecting any default on that front, but in case there is a worst case scenario that plays out, how badly would emerging markets get hit?
Well, obviously, if there was a risk-off move, emerging markets would be hit very badly. That's typically what's happened in the past. But on the other hand, looking at the upside, if there was a resolution, then EM would be a kind of high beta play on a kind of agreement between Democrats and Republicans. So, you can see it both ways. That high beta play could be very positive. Unfortunately, it's a binary outcome, so it's very hard to play, through a directional trade.
But as a strategist, do you think this would eventually mean a risk off for global equity markets for a very long time?
Well, if it were to be a default, obviously, yes, that would be a massive problem for markets globally, and that would be very bad for risk assets. But as I say, that certainly is not our central case. I don't think the Republicans would ever even consider the insanity of going to a default. I think this will be resolved, particularly as the Republicans, if you look at polls, would be blamed for the default. That's certainly what this poll shows. So I don't think they're going to do that. I think they'll take it to the last minute. They'll take it up to the wire to try and get Obamacare toned back somehow. But I think the resolution will happen.
Right. I know neither side wants to be looked at as the devil at this point of time. Ramin, thank you so much for taking time out talking to us.